When will Bitcoin see its bottom? In this video, I'll show you all the signs that I'm looking out for in order for the next bull run to start. And I'll give you my prediction for when and where the Bitcoin bottom will be. Hi, welcome back to the Virtual Bacon channel where we cover all things to help you build wealth in crypto. Let's first recap the state of the market. Since Bitcoin price reached its peak in October of 2021, it's fallen about 75%, with altcoins down 90%. The supercycle narrative is dead. Between Luna's collapse, FTX going under, and the end of the entire crypto lending industry, the market finds itself in a deep crypto winter. We've reached the point where sentiment is at an all-time low, with many calling for the death of crypto. However, all of this has happened before. If you're still here, congrats, you've earned your stripes. Now, let's see if history will repeat itself or if this cycle will be different. While the past doesn't predict the future, it gives us a chance to develop a plan instead of just guessing. Since crypto's inception, all cycles have shown a consistent 4-year time frame. Let's take a look at a few of them. Looking at the bear markets of 2014 and 2018, let's first look at the basics, like how long it took for the cycle to bottom and how far the prices fell. In the 2014 and 2018 bear markets, both market cycles took between 350 to 400 days from the bull market peak to find their bottoms. Today in this cycle, we're right around 375 days since our bull market peak, putting us between the previous two cycles. Also notice that both cycles pulled back about 75 to 85% from their top. We're currently sitting at 75% below the 2021 peak. So I wouldn't be surprised if prices dropped a little more from here, but I think we're close to the bottom. We also want to look at the price action that occurred right after Bitcoin found its previous bottoms. Notice how these cycles experience months of sideways price action rather than a sharp bounce. 2014 had 5 months of sideways action and 2018 had 3 months of sideways action. So if we're going off of the past charts, I expect months of boring consolidation before hitting the bottom. The Bitcoin halving is also a great indicator for signaling the Bitcoin cycles. Bull markets tend to start about 1 year before each Bitcoin halving, and the next halving is in April of 2024. With this timeline, the capitulation phase and the 1 year pre-Bitcoin halving timeline are actually starting to sync up, with all signs pointing to Bitcoin following the same path as previous cycles. For the short term, I feel the Bitcoin bottom price could be between 12K and 19K. 12K was the peak of the bear market rally in 2019, so the old resistance could become support. 19K is the 2018 all-time high and the key support level for the majority of 2022. If Bitcoin is to see a long-term reversal, it needs to break above the 19K resistance in order to show that it has recovered from the FTX crash. From a purely technical analysis standpoint, daily and weekly charts are both starting to show a bullish divergence on the RSI indicator. This suggests a short-term bounce is imminent. And remember, when in doubt, always zoom out. Short-term price action is more susceptible to the news cycles and difficult to predict. Let's be honest, very few of us saw the FTX collapse coming, and there isn't a price chart that could have predicted that shit show. By the way, if you want more technical analysis videos, let me know in the comments and subscribe if you haven't yet. Speaking of FTX, let's look at the damage it may have caused and the impact it has on the Bitcoin bottom. Cycle after cycle, crypto experiences events like the FTX collapse that makes everyone question if it's built to last and if they even want to stick around. This is because many people are unsure if the negative events of the current cycle is much more severe than the older ones. Between the massive Mt. Gox hack or the implosion of the giant Quadriga CX exchange, crypto markets have been tested by many similar events to FTX, and even during periods with less adoption. While FTX is one of the craziest events to happen to crypto, it is not beyond repair. We just need to give it some time and watch out for all the possible contagion targets. What has shown cycle after cycle is that market crashes will flush out bad actors or those who get greedy. Luna, Celsius, BlockFi, and FTX all borrowed against their unrealized profits and user growth, and then doubled down when the market turned bearish, and they are now flushed out. Using leverage is the easiest way to get wrecked, regardless of whether you are smart money or not. To complete this final flush of leverage, we need to see the dust settle around unsecured loans based on inflated coins and unrealized profits. Right now, there are only a few players left that still have to solve their leverage and borrowing issues. Genesis, Grayscale, and Digital Currency Group are the main players left. They are currently holding the crypto market hostage like a hanging knife. This needs to be resolved before the market uncertainty can subside. I could see this being settled by the end of this year or early 2023. To learn more about the grayscale situation, make sure to check out my previous video, link in the description. Once the crypto reset is complete, we will be facing one final headwind: regulations. Regulations usually have a negative connotation, but there's both good and bad regulation. One sector that actually needs regulation is high-yield products. These highly unregulated products help pump prices but ultimately fuel the crashes. In 2017 and 2018, it was the ICO craze, which was hunted down and now regulated. This cycle, it was unsecured lending products and high-yield DeFi products. Luna and UST was the perfect example, promising 20% APR and supposedly zero risk. After its collapse, it's clear these high-yield stablecoins need regulation. What designs are safe and allowed, and what is clearly a Ponzi and not allowed. Also, there should be clear tracking on the collateral that's backing these products and where the yield actually comes from. While I like DeFi a lot, I expect super high yield products to die because it's unsustainable and leads to retail getting wrecked. Another area of regulation uncertainty is with the SEC and security laws. We still don't know the rules around which type of cryptos will be classified as securities. The SEC particularly targeted DeFi coins with revenue sharing this past cycle, and I don't expect them to stop anytime soon. SEC Chairman Gary Gensler is determined to gain control of the industry and classify most coins as securities, but they are still using the ancient Howey test, which is a series of 4 questions to determine if something is a security or not. The problem is it's not actually effective because the test was created long before cryptocurrencies existed. On the bright side, the SEC has classified Bitcoin and Ethereum as non-securities, and it's likely why there are so many Ethereum competitors in the market. But in order for other crypto sectors like DeFi and payment networks to flourish, the SEC needs to set clear precedents on its expectations and be willing to provide guidelines. The XRP lawsuit will be important to watch, with the results expected by the first half of 2023. If XRP emerges victorious, the crypto industry could finally receive some legal framework we have wanted for so long. Despite the dark times we have seen recently, we need to take a step back and look at how far we've come because fundamentals remain strong. If your confidence in crypto has been shaken because of recent events, that's okay, you're not alone. But here's why I think crypto is set up for long-term success. The role of Bitcoin as an asset is more real than ever. Bitcoin can become global money and act as a store of wealth as the world becomes increasingly digital. Just ask any Gen Z investor, they much more prefer Bitcoin over gold. Right now, there's a lot of turmoil in the world as more and more assets are frozen or sanctioned. Wealth stored in Bitcoin goes with you wherever you go, and a censorship-resistant asset will always be needed. Moreover, institutional adoption is stronger than ever. Fidelity, BlackRock, JP Morgan, and many other firms all added Bitcoin to their trading platforms. This is a big shift from CEOs calling Bitcoin a scam in the last cycle to now adopting it as part of their business. The orange pill is real. The retail awareness around Bitcoin has also come a long way since the last cycle. Although Bitcoin is at the same price as 2019, the sentiment around this price could be the most obvious indicator of how far we've come. While we sit at around 17K today, the market sentiment is completely bearish. However, only 5 years ago, 17K was the market top and represented a state of euphoria. Same price, completely opposite reactions. This is likely because way more people know and believe in Bitcoin and hold it for the long term today versus the last cycle. This cycle also brought in a wave of mainstream figures who have spread the knowledge of crypto's potential and are normalizing it as a legitimate asset class. Every time you discuss investments like real estate and stocks, you need to mention crypto in any conversation today. Okay, so here's my prediction for the Bitcoin bottom. I think we will see our market bottom within the next few months between the end of 2022 and Q1 of 2023. My bottom price target is between $12,000 and $19,000 for Bitcoin. I use a time range and a price range for the bottom target because I don't think you need to catch the exact bottom. As we discussed earlier, the cycle bottoms are likely to be boring sideways periods instead of a sharp bounce. So there's really no need to stress. When the bottom is in, the prices will clearly show itself. Simply watch for consistent higher highs and higher lows in a longer time frame on Bitcoin's chart. I'm okay with missing the first rally because I'd rather wait for a clear trend to develop before I fill my bags. Remember, majority of the gains will come from surviving until the next bull run and holding, not from trading. Speculating on the exact bottom typically leads to bad decisions, as the last part of the bear market is choppy and very dangerous. Right now, surviving and DCAing into Bitcoin and Ethereum will be the most profitable strategy, and this is exactly what I'm doing now. My top priority is to accumulate Bitcoin and Ethereum, as I believe they are no-brainers at current prices. If you liked Bitcoin at 40k and Ethereum at 3k, you should really love the buying opportunity right now. I also try to maximize my portfolio holdings in terms of the number of BTC and ETH rather than dollars. This helps me focus on the bigger picture instead of the short-term price swings. If you haven't yet, I'd recommend toggling your portfolio tracker to be denominated in BTC and ETH instead of USD. Try it, you will love it. Regarding altcoins, I'm holding off on accumulating until we start to see Bitcoin and Ethereum recover first. This is because during bull market cycles, profits flow from Bitcoin to Ethereum and Ethereum to altcoins. Altcoins are highly unlikely to pump unless Bitcoin and Ethereum do first. The market bottom is close, and if you made it thus far, what's waiting a little longer? Okay, that's it for this video. If you like this content, remember to subscribe and share this video with your friends. Also, make sure to check out our free newsletter on virtualbacon.com, where we provide weekly market analysis and altcoin insights. Thanks for watching, and I'll see you guys in the next one.